coming to you. Good afternoon. Thanks so much for joining us on the show. Wanted your sense on the entire IT and Pharma pack because both of these indices are lagging in today's trading session. Of course, Pharma is also in focus on the back of the reciprocal tariff that Donald Trump has announced, and there is some conjecture around the tariff, and they're saying if it's a 10% tariff, it's going to deeply affect the EPS of a lot of pharma companies. So, what is the sense that you are making of this sector? Because all of these defensives, rather IT, Pharma, FMCG, they have not been doing all that well in the last couple of weeks.
So I think that's more a function of the domestic buying or lack of buying thereof in those spaces, right? FIs have been selling continuously. Domestic fund managers are sitting on at least 2 lakh crore of cash. So where they're choosing to focus their buying is where those are reacting positively. And I think on the pharma and IT, till this Trump reciprocal tariff scenario gets clearer, I think they are staying away from it. On a longer term perspective, I'm still bullish on these because of rupee depreciation. I think there's also opportunities for mid and small cap IT companies from the AI consulting space. There's also opportunity for pharma from the generics, from the API. If China is going to get a higher tariff, then there could be some shift to India. So it's an interesting play to watch. But I think that the fact that the reciprocal tariff, the calculations are happening, and from 1st April they're going to kick in. That uncertainty is making domestic funders stay away from this. But otherwise, I don't see that over the medium term. They are continue to be safety packs where I would say that some amount of allocation should be there.
In fact, Realty, of course, was one of the key sectoral winners from last year. These prices also have come off in the recent correction in the market. Wanted to understand if you're spotting any trends within Realty, if there's anything looking good for a buy or an add.
I would still look at premium housing. That's the company which are focused on that segment, because I don't think affordable housing is going to recover in a hurry. I know that there was a lot of giveaway and people's EMIs will go up because of the tax giveaways during the budget. But I still need a lot more needs to be done. I think EMIs haven't dropped yet. So affordable housing is still something the K-shaped recovery will continue to sustain. So I would say that anybody who's developing premium properties, I would still back them. And I think you're right that from September on, the Realty pack has corrected about 15-16%. So a lot of selling has happened when the FIs have been selling. I think the cascading effect of that has been hurting Realty. And so selective developers who are focused on the high-end premium segments is where I think there's some value today, little bit.
Okay, Mr. Subramaniam, just on that note, extending that point, in the recent MPC meeting, we've seen a 0.25% rate cut happening. The rates have come down, and it said that it's going to boost demand for home loans as well. Also, the consumption, Philip, that you spoke about in the budget is expected to give a little bit of a leg up to the entire real estate space. On the back of this, while we were talking about affordable housing, what are you making of some of these housing finance companies? How are they looking right now?
See, for the housing finance companies, the problem is that their long-term costs of borrowing, right? They have to come down for them to really pass on this rate cut. The rate cut is at the short end of the market. So at the long end of the market, there still isn't that much of an easing. And so from a market share gain perspective, somebody could reduce EMIs a bit, but it's going to be a lose-lose game. So I think that a lot more needs to happen in the economy for their costs to come down. And then only they can afford to really drop the EMIs, the rate of lending, and give a boost that. So I still think that with the 12 lakh as the sweet spot, right, from the budget perspective, that's still people who can, if you say, if they're earning 12 lakhs, right, and then you can say about 40 to 50% is what they can afford as EMI, then you're talking about 5 to 6 lakhs per year. So at that sweet spot is where there will be action, but that's not a large part of the market. And that's why I don't think at the affordable end is really going to make a big difference. It's still people upgrading from 2-bedroom to 3-bedroom, people buying second homes on the outskirts of cities, which are much larger. It's still the premium segment which will come into play there. I don't think yet there's enough happening on the interest rate front for a mass affordable housing pickup to happen.
Kunal, anything within Realty that's looking good for a buy?
Yeah, I think DLF, Godrej Properties and Oberoi Realties are the three names which I was looking at in terms of the divergence from the averages, the bullish the RSI divergence on the setup for these stocks on the daily charts, as well as the slight increase in volumes for these names. as compared to the previous leg when these stocks were going through a correction. Now that indicates that maybe we could be at a point where many of these real estate stocks could be at a short covering mode. So I think purely from a trading play, say over the next 1 week, 10 days, I would probably be looking out for these three stocks as potential candidates of revival, and maybe expecting a 5% to broadly 7 to 10% kind of a rally from the current levels.
Okay, so that's in the Realty pack. Naresh, coming to you, want to get your sense on the entire PSU banks basket, because if you take a look at that on a month-to-date basis, that index is lower by around 6%. Do you believe this correction is good enough for maybe a relook at some of these names, and what are you liking from the PSU basket?
So the first fact is, if you look at the PSU bank basket, majority of them did not make new lows, like what has happened in the small cap indices as such. So something like a Union Bank of India, the lows back in January were closer to around 100, 102. The stock made a bottom around 108 yesterday, and I started reversing. So relative strength finally being seen here. There is no downward momentum to be sharp, and they've already corrected 30-35% from the top majority of the names. So Union Bank of India looks interesting. Similarly, Bank of India, Bank of Baroda all look interesting for the same reason. They're trying to make a base and could make a comeback from here. Even the largest one, State Bank of India, did break below the 720 mark, but did not see any follow-up selling pressure. But for that, I would wait for a sustained move above 740 to call a reversal there. But Union Bank of India, Bank of India look interesting at current levels.
Okay, those are some banking names from within the PSB pack. Let's just take a look at what RVNL is up to. Their joint venture has bagged an order for construction of 9 stations, the value at about almost 554 crore rupees. There's TTK Prestige as well, wherein there is a 500 crore rupee board approval for commitment towards operational and capital expenses. And then, of course, there's L&T, which has acquired the remaining 26% stake in their arm, L&T Special Steels, for 170 crore rupees. A bunch of these stocks are the newsmakers. L&T, of course, looking good. A 2% move is what you're seeing on the stock right now. Sunil, where else would you feel that the correction is maybe getting close to over or behind us, and these segments are looking attractive now to start at least nibbling into?
I think the capital goods space, right? I think I see that a lot of correction has happened there. Now, while things are not yet turning around on the demand front, I think if the consumption plays through, then you will see private capex picking up. And I think government 2 quarters of slowdown on capex, it also is due for a reversal. So I think the market has a little bit overreacted to the capital goods side correction there. And I would say that looking at each company and what kind of orders they are likely to get, selective value buying is emerging in the cap good space, especially in the mid and small cap space. So I think that's the place where I think a correction has really helped them get closer to a bottom, if I may say. But you still have to have a 6 to 9 month outlook in buying these. I don't think a real short-term bounce back is on, but I think they are closer to the bottom. So it's a safer bet to keep accumulating them now over the next few weeks.
Okay, Mr. Subramaniam, on that.
If you like this video, then like, share and subscribe to ET Now.